All right, let's get back to the markets. Let's show you the early performance for the broader North American complex of stocks. It feels like we're struggling to find direction for equities right now as investors are weighing a whole lot. Certainly, they're going to be weighing those earnings stories, and they're also watching the news on the economy, plus how the bond market is treating all of that. We'll show you those market boards in a second. Alan Nuckman is Chief Market Strategist at Bullseye Option, and he joins us for some more analysis. Alan, nice to have you with us. What are you watching right now?
Well, I'm watching this psychology more than anything. We've got so many positives, and the fact that the S&P has stalled here and slipped a little bit from its big rally. We had a huge bounce off that bottom. But it's interesting that the risk reward is set up for the bulls, but the psychology is so negative. Even though we've got the fastest employment rate recovery in history, we've got record wage growth, and the stock market itself is only about 7% off its all-time top, 7% off the bottom, and it's up 7% in the last year, considering we almost have World War III and we're coming out of a global pandemic. So I see positives.
When you put it that way, you know, it does make some sense. And when we look at that one-year chart for the S&P 500, which we literally were just doing, I hear what you're saying. Now, when you talk about the risk reward being set up for the bulls, what do you mean exactly by that?
Well, there's so many stocks that have been beaten down that have just been kind of thrown out the window. And, you know, the stock market is a reflection of earnings, and earnings continue to be fantastic. All-time record profits in 2021. Everybody's concerned about what could happen in the future. We couldn't keep up this pace. Well, you know, that may be true, but corporations are cranking it out right now, and that is a function of the stock price. It's price to earnings, and with this, the earnings continue to grow. That the PE ratio is actually coming down, and stocks are a lot cheaper than they were here just, you know, months ago and years ago.
Well, we have that storyline playing out to a certain degree in Canada because our technology index has dropped 40%. But you would barely know that if you're just reading the headlines, because Canada's stock market is in positive territory this year. The energy group, gold stocks, copper-related names, anything commodity-related has had a wonderful year. And so when you look at the momentum in the market, do you see anything slowing those outsized gains for the commodity complex going forward?
Well, that's not my job. It's not my job to pick the top of the market. Those people have been unsuccessful for more than a decade. So they've been trying to do that in stocks, and now they're trying to do the same thing in commodities. Commodities have a lot more upside potential. It's supply and demand. And they're true, you know, barometers of the economy. And I look at higher crude prices as a positive sign. There's demand there. There's demand for all these commodities goods. These are all very positive signs. There's still a lot more upside. You know, 2008 was the high in the commodities markets. Natural gas, even though it's at 12-year high, still is, you know, significantly lower than it had been in the early 2000s. So there's still more upside. And just because prices go higher doesn't mean that's got to slow the economy. It doesn't have to do anything. And I think everybody's impression that a recession is looming, maybe 2 years out. Look at interest rates. And, you know, that's the equation. Interest rates are in the markets are pricing in, getting us to about 2.5%, 2.75%. That is still super low, and that's not going to slow growth. So I don't know why everybody's guaranteeing that the market has to slow down and there has to be a recession. Everything else is telling us otherwise.
Well, I think it's just, to your point, it's the way the market flows and goes. And when you see some of these commodity stocks having huge rallies, actually coming up, we're going to have some notable calls on a couple of Canadian commodity players. They've had big runs, but the analyst who covers them is also concerned about the macro headwinds. Alan, we did start this hour by sharing an updated view from the IMF on the global economy. Right. And, you know, as much as interest rates are still historically low, and there's a lot of U.S. consumers, certainly a lot of Canadian consumers with cash right now. You know, when China has these continued lockdowns, for example, tied to COVID, and they are a big buyer and consumer of things like commodities, you would think that some have to just sort of keep an eye on what's going on in the rest of the world to try to determine the flows of money going forward.
Well, that's healthy. You know, you've got to obviously be aware of the situation. There's always going to be pullbacks, but like you talked about, momentum is a very powerful force. That's what they teach you in physics day one. And, you know, the stock market momentum over the last decade, there's been able to throw it off. You know, we get pullbacks. And again, this is a modest pullback. specter of what happened here and what's happening in Ukraine, and the stock market is within striking distance of the all-time forever highs. So, again, money has to move, and there's still huge opportunities in the stock market, and that's where money is continuing to flow until there's an alternative choice, until interest rates get to 4 or 5%. There really isn't any alternative at this point. So I think there are still huge opportunities here, and a lot of the stocks, you talk about tech stocks that have sold off, even the big boys, are still offering a lot of value. That innovation's not going to go away. Everything's changed dramatically in our lives in the last 5 years, 10 years, and that's not going to change. Commodities demand is going to continue. So I remain optimistic. Turn that frown upside down. Money to be in these markets.
Alan, thanks a lot. Always appreciate your time. Alan Nuckman joining us with his take on the markets. And, of course, every day on Market Call, we get plenty of opinions from some of our regular guests.